I'm Alicia Marin. My guest today is Dave Toole. He's the President and Chief Executive of Gasonics International Corp., a supplier of photoresist removal equipment. Welcome.
Thank you.
Mr. Toole, very briefly and in layman terms, describe what your company does.
Well, Gasonics International is a supplier of photoresist removal equipment to the semiconductor industry. And what photoresist removal equipment is used for is in manufacturing semiconductors, you produce many layers of images, one on top of the other, to accomplish that device. In order to do that, you stencil an image in the photoresist material, and after you've done that, you etch the underlying material. You no longer need the photoresist, and we remove that photoresist. So we might remove it somewhere 20 to 24 times during a typical manufacturing process.
Now tell me, what makes your company unique to the others in the industry?
Well, what we do is we utilize downstream technology. Downstream technology is a gentle way of removing this photoresist, and so it improves our customer yields. And a 1 or 2% improvement yield can mean tens of millions of dollars to our customers. That's one critical factor. Another is our exposure to our customer base. We've been serving most of the major U.S., European, and Pacific Rim semiconductor manufacturers for almost 25 years.
Who are some of your customers? I know you work with Intel and some others. Can you just name some of the big ones?
Sure. Intel, Motorola, AMD, Siemens, SGS Thompson, Samsung are many of our largest customers.
Now, I think I noticed that Intel accounted for 26% of the company's business. Are you too dependent on that company?
We don't believe so. If you look at where our products are being used, a significant amount of the new fabrication facilities that are using 8-inch wafers to manufacture semiconductors use our products. So we're seeing a lot of broader acceptance of our technology with other customers.
The company reported impressive numbers last year. What fueled that growth?
Well, there's a number of ingredients. The first is the semiconductor industry last year grew at a very aggressive rate, 35–40%. And so we grew along with that, but we grew at a faster rate than the industry, somewhere around 59%. And that was driven by what I mentioned earlier, the mask layers. And each generation of new technology, our customers are using more mask layers. And what that means is that they're using more of our photoresist removal equipment.
Now, with semiconductors becoming smaller and smaller, how does that affect your business? What do you have to come up with to...
Well, there's a number of things. I mentioned the additional mask layers. With each of the new generations, our customers try to reduce the feature size of their device. That gives them the ability of putting more integrated circuits on the same size wafer, which is what the device they manufacture on. In order to do this, it takes more mask layers, and within each mask layer, there's about 200 independent steps that they go through. And what that means to us is there are other opportunities and markets for us to pursue with each reduction of feature size.
Now, you mentioned the semiconductor industry grew approximately 30 to 40% last year. What do you see for this year?
Well, it's interesting. If you were to look back just 6 months ago, there were a number of forecasters that were saying that the growth would be around the 15–16% range, and folks like DataQuest have now increased their forecast to around 30% for this year, as well as others are increasing their forecast. So what we're seeing is that because of the proliferation of things like PCs, telecommunications products, it's requiring a significant increase of silicon in which to support those industries. And so we believe that that's going to continue to fuel growth for the foreseeable future.
And what type of growth do you see for your company this year, next year?
Our company, as has been in the past in the 80s and 90s, we've grown at a faster rate than the industry. We expect that we're going to continue to do that by introducing new products as well as taking advantage of the growth in the industry.
Will there be any cost efficiencies that the company needs to make or acquisitions?
Yeah, there's a couple of things that we've done. One is from the standpoint of cost efficiencies, we focus significantly on cycle time reduction. And a couple years ago, it would take us about 20 weeks to manufacture one of our products, and now we've reduced that down to 10 weeks. The impact that had financially is if you looked at our inventory between 93 and 94, it was flat in reflection of a 49% increase in sales. So we're significantly more effective in reducing the cycle time. In regard to acquisitions, we continue to explore to see if there are synergistic acquisitions available in the marketplace, though nothing is on the short-term horizon. We're right now focusing on new products and new markets that we're going after.
I know the company's been focusing on expanding into the international market. Can you tell me a little bit more about that?
Sure. Presently, Gasonics International, a reason for the international in the name, we presently do about 40% of our business overseas, which has been driven primarily between Europe and the Pacific Rim. We intentionally did not focus on the Japanese market. And the reason is when you take the first step into Japan, you better be prepared to run quickly and support that financially. The company went public in 1994 specifically for the purpose of capitalizing the infrastructure in such a way to penetrate the Japanese market. And so we've been a lot more aggressive in setting up a new distributor, and we believe that market is very receptive to our products because of our technology advantage. I'd also like to point out that if you look in Korea, Taiwan, Singapore, we compete with the Japanese manufacturers. And so therefore we understand the competitive dynamics, and we do very well from a market share standpoint in those regions. So we believe Japan's a significant potential for us to increase our revenue.
What type of potential do you see it as?
Well, if you look at in 1994 at the breakdown of capital expenditures, approximately 34% of those took place in Japan. And in 1994, about 2% of our revenue came out of Japan. So we believe there's significant upside potential for us there.
You mentioned the IPO. The company also held a secondary offering in March of this year.
Right.
Were you strapped for cash, or what was the purpose behind that?
Well, a couple of purposes. Number one, listening to the investment community. Their role is to get a return on their investment, and they felt that our float was too small. So we wanted to increase the available shares to trade in the marketplace. And the market was in a very favorable position in which to receive companies coming out for a secondary. I'll point out that our company does not have any venture capital funding. We've grown the company over 24 years through internal cash flow and profitability. So from the standpoint of understanding how to manage it and having the need for cash, we've been cash positive 4 of the last 5 quarters. So it was primarily to increase the float as well as to provide more outstanding shares.
Overall, what does the balance sheet look like? How much cash do you have in the bank? What do your margins look like?
We have in the mid-$30 million range of cash marketable securities. We have no long-term debt, and as I mentioned, we're positive cash flow. If you look at the company's margins, we've been moving quickly from the mid-40% range. In the last year, we've been averaging in the 57% range, which we believe is leading in our industry segment. It's very favorable.
And do you see those continuing to increase?
We believe that there's a glass ceiling around 60%, and we're going to do what we can to drive towards that. And what we have to look at is the counterbalance of new products coming into the market and understanding what impact that might have on margin. But we believe there's some upside, not significant. You
mentioned new products. The company introduced Performance Enhancement Platform. Can you tell me a little bit more about that and what it means for the company?
Sure. The Performance Enhancement Platform is focusing on 2 specific issues. One is improving capital productivity for our customers. So being able to provide them a better return on their investment when they buy the equipment. And what that means to them is what they're looking for is higher throughput. And the product enhancement platform, we use 2 process chambers, which significantly improves the throughput. And that's focused on the Asian market where they put all of their equipment in one island and bring all the wafers to it. So higher throughput. The second area is providing a cleaner wafer. I mentioned earlier within each of these mask layers, there's somewhere around 200 process steps. And a number of those are trying to remove materials that are not needed in the finished device. And so this platform also gives us more ability to provide a cleaner wafer for our customer, therefore increasing their yields. So we're looking at improving capital productivity and improving customer yields.
And finally, do you have estimates for this year's outlook? What do you see?
Again, we see that in relationship to last year, we're going to continue to grow at a faster rate than the industry. I'm not in a position in which to communicate specific estimates for the next few quarters, though I'll point out in our first 2 quarters of this year, we already outperformed our entire year's revenue and income in '93. So we're growing at a very fast rate.
Well, thanks for being here today.
Thank you.
Our guest today has been Dave Toole. He's the President and Chief Executive of Gasonics International. I'm Alicia Marin with the Bloomberg Forum in New York.